All right, everyone. Welcome to Canadian Mortgage Weekly for October 30th at 11:30. Today we have an awesome episode planned for you all today. This is episode 103. We're talking about when mortgage rates will be coming down. I'm sure it's a topic that has been all across your minds. I know that I'm getting it on my end with what's been happening in the market. So to alleviate some of the questions and to get you guys some information today, I'm hoping that we can actually get down to the bottom of this and look at some of these rates, some of the factors that will actually affect what's happening with rates and when they will come down, because everyone wants to know. So let's get right into it. And thanks for joining us. This is episode 103 of Canadian Mortgage Weekly Live, Canada's only weekly video mortgage news podcast with 𝗪𝗏𝗧. We stream live from 𝗪𝗏𝗧, Ontario. It's a small town just about an hour north of Toronto, but I service all of Ontario, and I service all of Ontario virtually. So if you are looking for a mortgage and you're in Ottawa or Windsor, we can help you with that any way you are, and we can get you a mortgage. We meet over Zoom, WhatsApp, Skype, whatever you need. But just getting right to the meat of things, when are rates going up? I'm sure that you probably all have an idea of when you think rates are going to go or down. We'd love to have you drop a comment below into the comment box and just let me know when you think rates will be going down. We have rates, today's mortgage rates, just below here today. I know that people are getting their renewals right now, and it's not looking good. People are getting the renewals after being in a mortgage now for years at 1 or 2.5% in that range, and the mortgage renewals are coming in at 4.5% and 5.5%. And what that's translating to for all our buyers and homeowners right now is they're getting renewals that are coming in with mortgage payments hundreds of dollars higher than what they've been used to and what they've been doing for the last number of years. I know I have a renewal coming up, and all the options I have, whether it is going fixed or variable, or say if I switch my own mortgage to a lender that I work with, no matter what I need, no matter what my options are, it's all hundreds of dollars higher. So something to really consider is looking at all your options at renewal time. And if you have a renewal coming up, it might be a good idea to reach out to your broker right now and just see what options there are available. Maybe it might be worthwhile to you to actually look at transferring your mortgage to a new lender before the renewal date, or asking the broker to get you a early renewal. Some lenders don't offer early renewals. Some lenders do look at renewals and say, okay, we can only offer you a renewal about 90 days from renewal date. And that's what I'm seeing a lot right now, is a lot of lenders really want to wait until those 90 days before the renewal date to offer you an interest rate, because interest rates keep changing and they keep going up. And we also have an interest rate announcement coming up later this month, which we'll talk about shortly in my presentation with the mortgage news. So as I mentioned, feel free to drop a comment below as to when you think mortgage rates are going up. Let me just pop that up there. Sorry, going down. Love to hear that in the chat. Do you think it's going to be later this year? Do you think at our next rate announcement we'll see rates come down? Inflation numbers just came out for September, and we did see that inflation is still at all-time highs. However, it has come down. So the rate of inflation has come down, but it's still happening. Prices are still going up. We've seen 𝗪𝗏𝗧 in the news recently talking about how they've recently raised all their prices and now they're locking them in until January. And, it's a lot of price changes that keep happening for real big staple items. So it's good to see that inflation has come down just a slight amount, but it's still happening. So do you think the rates are going to go up or go down later this year? Do you think they're going down at the next rate announcement? Do you think that they'll go down next year, January, February, before the spring housing market? Or do you think rates will go down in the summer next year, or later next year, or even 2024? we'll have to see. I know that there's been a lot of economists and banks that have come out saying that house prices are forecasted to go down 20 to 25%, some even 30% by early 2023. So what that tells me is that they're thinking that house prices will go down by that much by early 2023, means that, they don't think house prices will go down any further past early 2023. So what does that translate to me in terms of rates? Well, I know that if rates started to go down today, we would see a flurry of buyers start calling, want to get set up with a real estate agent, want to start looking at homes and take advantage of these lower rates because house prices have come down quite considerably and they would want to get in on the action with a lower interest rate. So what do you think? I know that some of the data that I have that I want to share with you is that house prices have now gone up 2 consecutive months in a row here in Canada. So that is good news. And with rates where they're at now, I think that for rates to actually go down, we would need to see some things happen in the market. And those things would be that people would need to start seeing job losses in the market. And I know that we've heard some rumblings of job losses happening already, but we really haven't seen the media take note of that. We haven't really seen the data come out with job losses. And I really believe that it's until that starts hitting the data and until job losses are recorded, which may not happen until after Christmas break with all the Christmas hiring, that we won't see rates come down anytime soon. So I guess what I'm trying to say here is that we probably will not see rates come down for the rest of the 2022 calendar year. So we should expect rates to remain the same, if not possibly go up a little bit more between now and the end of 2022. But following the Christmas season, we might see a lot of people hold off on purchases, hold off on spending, really think twice about what they're spending their money on. And what that's going to translate to is companies seeing less revenue after the Christmas season, after the holiday season, whatever you want to call it. And they'll need to lay off or cut back on their labor force for one reason or another. And it's until those job losses hit the data that we will not see any action happen on interest rates. The ways we could see interest rates come down, and that could be early 2023 to mid 2023. And that would also coincide with the rate increase cycles that we've seen in the past, number of recessions. So we've seen in 2008 and 2009, there was a rate increase cycle that lasted between 12 to 18 months. In the early 90s, we saw a rate increase cycle that lasted between 12 to 18 months. And in the early 80s, the time where all my parents' generation talk about, that rate increase cycle also lasted between 12 to 18 months. And that timeline would put us between February and July of 2023. So that coincides with what I was just talking about there with job losses and when I expect those data points to hit the media. And then another thing that could affect interest rates going down would be inflation. So if inflation stops going up, which it has as of June of 2022, we've seen inflation slowly come back down. It's still happening. Not saying prices aren't increasing anymore. It's just the rate in which they're increasing has slowed just slightly. As that continues to slow, the Bank of Canada has a target rate of 2% for inflation. Right now, we're at 6.9%. So it'll be really interesting to see when that comes back down to that 2% level. And could that coincide with the February to July 2023 timeline? It very much could. But we would need to see inflation come down from its current level of 6.9% to the 2% level that the Bank of Canada has a target at. So there we go. So job losses would be one reason why rates would come down. Another reason would be that the timeline of rate increase cycles usually lasts 12 to 18 months. And another reason why rates would come down is that inflation comes back to the 2% target rate that the Bank of Canada is aiming for. Interested to hear your comments below as when you think rates will come down, because as I mentioned, clients right now, they are calling, they really don't like the renewal rates that are coming in. It's hundreds of dollars higher than what we're seeing versus what they had in originally taking their mortgage at the 1.5% to 2.5%. So a lot of people are looking for relief right now on interest rates. So those are three ways that I could see rates coming down. And that timeline puts us in between the February to July of 2023. I have talked to clients of mine that don't believe that rates will come down until even 2024. I don't really see that happening. We've never really seen a rate increase cycle last that long here in Canada. Especially if a recession hits, the Bank of Canada will need to take action to make sure there's not too much carnage in the market. So let's get right onto the presentation today. I want to really get into all that with you all. And we have some awesome data points to hit today. So let's just bring that up here. Episode 103. We've been doing this program for quite a while now. So this is podcast episode 103. And, why do I do this? I do this because I want to help Canadian homeowners know more about mortgages, rates, what's happening with the market. And has it been useful? I think it really has. We've seen a lot of people come to us. We watch your program, we find it very useful, and people have been responding very positively. And the financial impact that I want to make is I want to help my clients and homeowners save money, make good financial decisions. And if you are looking to get a mortgage, please do always contact a broker to discuss your goals and your plans, because everyone's situation is different. And really don't take advice off this video. Make sure you talk to someone and get your specific scenario in front of them so we can look at it further. So if you're looking at these episodes and you think they're a benefit to you, make sure you share, comment, and like this video so your friends and family can see what we're talking about, and so they can also benefit with what we're talking about here as well. So getting into the rest of the presentation here, 5-year bond yield. So why do I talk about the 5-year bond yield? I talk about the 5-year bond yield because the 5-year fixed rate in Canada closely is tied to the bond yield. Whatever we're seeing in the bond market always impacts the 5-year fixed rates in Canada. So in this case, we have 5-year fixed rates going up higher this week. And that's partly due to the fact that the bond yield has been rising just slightly this week. We're at 3.68 as of yesterday. So it's a little bit of a higher bond yield that we've seen all year. We'll watch this going forward. It could possibly keep creeping up until the 26th of October, when rates are due to be announced by the Bank of Canada. So if you're looking at getting pre-approved, if you get pre-approved now versus 2 or 3 weeks from now, it might be really good for you to do that so you can lock in your interest rates and get that set up before rates go up any further. And that way, when you're looking for a home, you'll be qualified for the max amount versus getting a pre-approval in 3 or 4 weeks when rates do go up, and you'll be approved at for a less amount of mortgage simply because rates have gone up and your stress test would have gone up as well. So inflation, we have Canadian inflation rate here at 6.9%. It's been trending down since the peak of 8.1% in June. Still affecting prices. Prices are still increasing. However, if the trending down does continue, we could see a very slow trending down. However, if it does continue, we will eventually hit that 2%. And once that happens, the rate hikes will subside and rates could start heading back down. So that's good news there. Looking at inflation rate for the United States, because we are closely tied to the United States inflation rate has also been decreasing. So the numbers as of September are 8.2%, and that's down from a high of 9.1%. So that's really great to see. Really good to see inflation coming back down. However, like I keep saying, inflation is still happening. It's just the rate of the prices increasing has slowed down a bit. What we really need to do, everyone, is stop buying things If we all stop buying things, the economics of all this, the companies will need to start lowering prices. They will need to adjust, but everyone keeps buying things. Everyone keeps buying new cars, and that's just continuing to fuel the price increases because there's such high demand these days for goods and services. So looking at the CDOR rate, why do I look at the CDOR rate? This really gives me a good indication if the current variable rate is a good deal or not. We look at the variance of the CDOR rate to the prime rate. Right now, the variance is very low. We're looking at a variance of 0.93%. Back when variable was a good deal, we saw this variance over 2%, which would mean that the spread between the fixed and the variable is very large. Now that spread has become very small. So whenever you're talking with a broker, make sure you not only consider the variable rate, but you also consider the fixed rate as well. And make sure you time that accordingly to your home ownership goals and plans, because it's really good to get that all settled out. Everyone has their own personal goals and financial plan into the future. Sometimes a variable rate could be right for you. Sometimes a fixed rate could be right for you. It's not all one size fits all. So it has been going up the CDOR rate, and because of that, the variance has been decreasing. We'll see if the variance continues to decrease next week here on Canadian Mortgage Weekly Live. Awesome. So now looking at next week's rate announcement, we have the current Bank of Canada overnight rates at 3.25%. Last time they increased to 0.75%. Love to hear in the comments below, whether you're watching on YouTube, Twitter, Instagram, Facebook, if you think rates will go up again and by how much. I've seen some industry professionals predict that this could be another 75-point increase. I've also seen it as low as a 25-point increase. So it's hard to say which will happen. I'm really hoping for a low rate increase. Inflation has been coming down. So we'll see if the Bank of Canada is okay with a low rate increase. However, the US and the Fed has increased rates by 75 basis points. So because we're Canada and because we're so tied to the US and because inflation is still over 2%, they still might be aggressive on that. So I ask you to join me on October 26th, which is Wednesday at 9:45 a.m. with a live rate announcement at 10 a.m. We'll do a pre-rate show and a live announcement at 10 a.m. We'll have a celebration as to whatever happens, the rate's going down or the rate's going up, or possibly staying the same. That could even happen too. The Bank of Canada has been very aggressive this year. But join me next week for that live rate announcement here on Canadian Mortgage Weekly Live. That'll be episode 104. And then we'll do a following episode the next day on our regularly scheduled time at Thursday at 11:30 to react to the rate announcement and to talk about how it's going to affect everyone going forward. All right, so Canadian average house price. I know you're all here watching for this amount, so it's actually really awesome. We've seen the Canadian national house price for all homeowners out there. This is really good news. The home prices on average in August did go up 1.5%, and in September they did go up again by 0.44%. Really great news. House prices have been trending up now for 2 months in a row. It'd be great to see if this trend has broken and that we're going back up now. We'll have to see going forward. Are rates going to continue to go up with house prices continuing to go up as well? It'll be an interesting market that we're in. So prices are getting close to where we were at the beginning of 2021. Minimum annual household income to get into an average house price home today is still $133,000 per year. If you don't have $133,000 a year per annual household income for your family, then I always suggest getting a cosigner. Getting a cosigner is pretty easy. You talk to your mom or dad or uncle or grandparent or someone that you know to be able to buy the home with you, and they can up your mortgage amount that you can be approved for to get into that average price home. And then we can remove the cosigner down the road once your income goes up, your credit goes up, or you build some equity. And there's many ways to get into the home that way. All right, so the minimum down payment required for the average price home now is just north of $41,000, and that's including closing costs. So to get into an average price home today of $640,479, you do need a down payment of just a little north of $41,000. So if you have $41,000 and income of $133,000 a year, you're in a good spot to be able to go forward and get pre-approved for your first home, and it will be an average price Canadian home. I know in 𝗪𝗟𝗏 and Barrie, Ontario, and Simcoe County in general, it's hard to find an average price home of this cost. However, there are homes available in this price range if you're looking at buying your first home. So again, that's what we have here for the average house price. Looking forward to sharing the rate announcement next week here with you all on episode 104. And looking forward to seeing your reactions and your comments to what's going to happen next week. It should be an interesting time for our industry as rates have been going crazy gangbusters this year. And now with house prices increasing 2 months in a row, it'll be interesting to see what happens going forward with mortgages and real estate. So as we end this program, we just want to say thanks for watching today. Canadian Mortgage Weekly, Canada's only video mortgage news podcast. And look forward to seeing you next week on Wednesday at 9:45 a.m. to go over the live rate announcement with you all. And if you have any questions, give me a call if you want to get a mortgage, either a refinance or a purchase. My name is Joe Bladdock. I'm based out of 𝗪𝗟𝗏 and Barrie, Ontario. You can also service your mortgage all across Ontario virtually. Give me a call or a text 705-238-3479. And we will see you next time here on Canadian Mortgage Weekly. Thanks for watching.